Welcome to the VietMaxim stream. If you just landed here and you're wondering what you're looking at, this video is for you. 5 minutes, by the end you will know how to read this chart and how to trade alongside the system. First, the most important thing to understand, I don't make trading decisions on this stream. The system does. What you're watching is a proprietary indicator that I developed. It scans the chart bar by bar, applies a mechanical rulebook, and prints signals as bubbles right on the price action. When it says go long, which means buy calls, I buy calls. When it says go short, buy puts, I buy puts. When it says exit, I exit. No gut feelings, no reading the news, no I think it's going higher. This is by design. Years of iteration produce one conclusion. The only way to trade options consistently is to remove the operator from the decision. So the system decides and I execute. That means when you trade with us, you are not following me, you are following the signals. If you see a green bubble, that's your entry. If you see a red bubble, that's your exit. Same signal, same time, same trade. Let me walk you through what's actually on the screen. The chart is a 2-minute candlestick chart of whatever ticker we are trading that session. Layer on top of the price action, you will see several plotted lines. Here's what each one means. The white line is VWAP, volume weighted average price. This is the day's center of gravity. When price is above VWAP, the day is leaning bullish. Below VWAP, bearish. The slope of this line matters a lot. A steeply rising or falling VWAP is the system's strongest regime signal. The cyan line is EMA 9, a fast-moving average. It tracks short-term momentum. When the cyan line crosses above the red line, momentum is shifting bullish. When it crosses below, bearish. The red line is EMA 21, a slow-moving average. When cyan is above red and both are trending in the same direction, the system reads its as bullish momentum alignment. The opposite, cyan below red, both trending down, is bearish momentum alignment. The system uses this as one of its entry conditions. The horizontal lines are ORH and ORL, opening range high and low. These are the high and low of the first 4 minutes of the trading day, logged in at 9:34 a.m. They are structural levels. Breaks above ORH or below ORL often start the day's biggest moves. The horizontal pink lines are PDH and PDL, prior day's high and low. High as priority structural levels on the chart. Price respects this. When price sweeps above PDH and reverses, that's a setup. Same for PDL on the downside. The yellow line are VWAP stretch boundaries. These define how far price has extended from VWAP. When price reaches a yellow line, it's statistically stretched. Mean reversion becomes more likely than continuation. The system uses these to time exit. The red dashed line, when it appears, is the hard stop for whatever position we are currently in. If price crosses through that line, the system exits automatically. That's the static furniture. Now let's talk about the signal. The system communicates through bubbles printed directly on the candle where the signal fires. There are about a dozen bubbles types, but you only need to know a handful to trade along. Go long, bullish green bubble. This is an entry signal. Go long means buy calls. The system just opened a long position, and if you trade with us, this is when you buy a call. Go short, bearish magenta bubble. Entry signal in the opposite direction. Go short means buy puts. These are the only two entry signals. Every trade we take starts with one of these. Scale out, a profit locking signal. This doesn't tell you to fully exit. It tells you the system thinks the trade has reached a checkpoint where you can take partial profit. Some traders trim a portion of their position here. Others hold a full position and let the system manage the final exit. Your choice. Add more secondary entry signals when we are already in a position and the system identifies a continuation setup. If you're already in the trade, this is your signal to add to the position. If you missed the original entry, this is your second chance to get in. Exit long or exit short. The full exit signal. This is when you close out the position completely. Pay attention to the trade direction. Exit long closes a call position. Exit short closes a put position. The trade is over. Here's how to actually trade alongside the stream. When you see go long, you buy a call. When you see go short, you buy a put. When you see exit long or exit short, you close the position. Full stop, no second guessing. When you see scale bubbles, that's your call trim or hold. If you see add more and you want to scale up your position, that's the signal. If you are conservative or miss the initial entry, this is your second chance. The hard stop is the red dashed line. If price closes through it, we are out automatically. You should plan to exit at the same time. Two things to remember. The system fires signals on the close of the bar, not intra-bar. So when a candle is forming, the signal isn't final until the candle closes. Wait for the close. And second, the system handles everything mechanically. There's no I think this looks good. If a bubble fires, that's the signal. If no bubble fires, there's no trade. That's the system. 3 rules. 1. Entries come from go long and go short bubbles. Exits come from the exit long and exit short bubbles. Everything else is context. 2. Wait for the bar to close before you act. 3. The system decides, not me, not you, not the news, the system. This is everything you need to trade alongside the stream.